GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to this weekly webinar where we're covering some of the major markets available to trade. Forex being the main part of the webinar, but we also have some commodities and indices and crypto that we're covering. If there's any market you'd like us to cover, drop a note in the video. Please just drop a comment and we'll make sure to cover that in future videos. Any other comments, much appreciated, and please obviously click the like button. That really helps us spread the word about these videos. Right, without further ado, let's start with these major currency markets, and as you may even be able to start to see here on our top left hand corner, the euro is trying to make a break to the top side. So this is the way I and we and the team here are viewing the euro at the moment, pretty much in an uptrend defined by this rising orange trend line. So we've made that big key breakthrough 120, which we discussed last week. Naturally, after that big bust through the 120 level and a couple of days of advances, since we had a fairly normal and very typical flag pattern, just a steady pullback of black candlesticks, and now as of last week we broke through that bullish flag pattern, pulled back, tested the flag, and now we appear to be breaking to the top side. So now in a bit more granular detail on the 4-hour chart, you can see that okay, there's a few spikes through here. I've chosen to use the closing prices because that's what the market ultimately tested, but you can obviously use the highs as well. In the case we dipped through it, but you can see we held the 50 period moving average. But overall, you can take away from this that the market broke higher, it pulled back to its rising trend line, to its moving average. We had mentioned in last week's webinar that we thought there was going to be a pullback to 120.50, and I said I would be surprised if we got back down to 120 again. We didn't quite get to 150, we were about 10 pips shy. What was it, 120.60 in the end? On 2057 if you like. So yes, okay, 7 pips away, and we rallied up nicely. We pulled back to that broken channel, as I mentioned, the channel of the flag pattern, and this all looks good at the moment. So you can see that roughly speaking, if I draw it in, we've basically got a zone of resistance through these last set of highs, and that's what we're challenging at the moment. So of course we could fall away again, but it's not the structure. It's not what the structure is suggesting here. Even down on the RSI, you can see we had a couple of highs, and we broke up, made a new high in RSI, pulled back, dipped under that line again, and we're back up through it. So for the time being, this is all looking fairly encouraging. Obviously, if the resistance holds, we could end up with some sort of top pattern, but that's not how it looks at the moment. This looks like a consolidation which is about to end. And if that's the case, then that means we're going to be up through 122. And if we're at the top of our chart obviously already, the next logical target, having made it through 120, would be a rally up towards 125, and actually we need to be on a weekly chart. And this all corresponds to our long-term view that we're on the cusp of a major rally in the euro and a major downturn in the dollar. Now 125 is obviously a big one because it's that previous peak, but it does look like in terms of our short-term trading perspective, we're both in line on a longer-term perspective. Having broken this downward trend, we're in line to retest this old high, and that corresponds to our trend line indicating we're in an uptrend that I had indicated here on our daily chart, and our broken channel pattern on the 4-hour chart. So not the best risk reward to be buying in at the just under the resistance here. In terms of a strategy, you either want to be waiting for another little dip above this trend line, or we want to be waiting for the confirmation of the break higher and then a pullback. Now fortunately, this is always something you kind of want to see. That move in the euro is sort of being confirmed in the pound. So what that tells us is this is a kind of universal move down in the dollar, it looks like. Now the question we asked last week is this dollar breakdown for real? that was a question, that is basically raising the idea, is raising the possibility that this all could be, there's all these big moves to the top side in both the euro, the pound, the Aussie we'll look at in a minute, they could not materialize. But never at any point did we say last week that that would be something to trade on, because this all looks like it's going ahead. We just need to be aware of the possibility that we're actually at quite big areas here, and especially in this pound. We've shown this chart numerous times, but we've been held up at 134 to 135 in sterling against the dollar for over 2.5 years. This is our fifth proper test of it, and oftentimes it's fifth time lucky. And when the resistance is held for this long, when it finally gives way, you expect a decent move to the top side, and that would take us back up to our double top high up here from 2018. Actually probably worthwhile drawing this level in. That's kind of ultimately what we're targeting should 135 give way. Obviously we've still got Brexit to go, the Brexit trade deal with the EU. I'm sort of the opinion that we probably get up and challenge these 143.50 highs anyway, no matter what happens with Brexit. But it's a matter of how we get there. And obviously, if we secure a trade deal with the EU, probably we can just cruise straight through 135 from current levels. If we do not, it probably involves another pullback, likely below this rising trend line, somewhere back into the middle of the range. I doubt even down to the bottom of the range. Maybe a test of 125 before ultimately moving back towards that break of 134. But that's all a bit forecasty. What we can see at the moment is that we're challenging this resistance, and we're just waiting to see whether that break to the top side holds or not. Okay, so moving swiftly on to dollar yen, and literally not changed this chart since last week, and last week I had not changed it either. So we're just in a very tight range here. We're between 103.70. We're right at the support at the moment. So if we break down through this support at 103.70, it's in line with the broader trend here, which is defined by this declining trend line and the resistance on the RSI. On a kind of weekly perspective, we did bit of a ding going on. We did take out the support, and we're not managing to get back through it on this kind of weekly basis. And 103 so far, potentially because of some Bank of Japan intervention, has held up. Excuse me, all sorts of connections going on in MT4. So we're at a bit of a crossroads here. We potentially, we've basically held the declining trend line. We're below the long-term support level, but there have been some big instances of buying below this support in the past. So we could be on the cusp of another big push to the top side. That's maybe what's holding this decline up. But for the moment, the trend is down, and it looks at the moment like potentially we've either got another buying opportunity to buy at the bottom of this range, like has happened several times over the past few weeks, or we're about to break lower. Firstly, challenge the low down here, maybe towards 103. Maybe we've got a 103 test coming up, and then we'll have to see if that holds and whether this downtrend can stay intact beyond that. Let's move on to the Aussie. So this is our daily chart, and you can see that we've now moved up through the key 175 level. This is something we've been alluding to for a while. This is our weekly chart. 0.74 was really the big one because that was where we'd peaked out and pulled back through the summer. But we've broken above it, and it does look like this. I mean, this is not a bearish looking chart by any stretch. Of course it can reverse, but we've taken out this key resistance at 0.74. We hit the 175 level, but it didn't really face any selling, and I wouldn't have expected it to, because this is where the selling took place at 74 from this old peak back here in 2018. So we're breaking higher basically, and so really from this longer term standpoint, it's a break to the top side. There are a series of peaks on the way down here. There's a series of round numbers that will be TP points potentially, but the trend is up, and so for the time being, we're just looking at our opportunities for pullbacks, and a bit like that euro had pulled back, but now it's up again. In terms of the Aussie, we're also challenging last week's peak. So maybe we get a bigger, if this is a little short-term double top, we get a dip back towards the moving average again. That would obviously give us a better entry point, but keep in mind that longer-term perspective that this is really accelerating to the top side of this Aussie. And so the fact that we had a steady uptrend that took us through the 74 resistance and then we accelerated, I don't expect a big pullback necessarily into the range. Probably the top of the channel holds and we get another acceleration to the top side. You know, this would be more be expecting something more like that this just range just holds and then we accelerate again to the top side. If this support gives way, then okay, then we have to start thinking about where were we previously, and probably another attempted move to the top side from the lower trend line would then make sense. But my assumption is that after this big acceleration to the upside, even though obviously 0.75 you can argue that is a long-term level, we basically easily broke through it and we've held it as support. 75 is down here, so we've not even got back to 75. So maybe a dip to 75, but just take the overall point that this looks like a generally pretty positive market, and the Aussie you could say is probably leading the direction of where ultimately the pound and the euro go to. Okay, let's move over to we're done with currencies for now. Again, if there are some other currencies you like us to watch, obviously there's the Canadian dollar, there's the New Zealand dollar, there's lots of other things going on. The New Zealand dollar, it tends to trade alongside the Aussie. It's looking even stronger in many ways than the Aussie is. It's very much a sort of China-led, commodity-led boom in these commodity currencies. So certainly watching that New Zealand chart as well. I can cover that if you guys request it, but there's only so much time we have on these weekly updates. So this is gold. I'd taken this declining trend line out for a couple of weeks, but I think it is still relevant because we have obviously just banged into it again, and this is naturally what you would have expected to happen. It wasn't as clean as it could have been, but basically we had our support area around 1850. We dropped through it, we came back and we nudged above it, but eventually we hit this declining trend line and we dropped through it again. So basically we tested, the support broke, support then transitioned to resistance. So we came up, having broken the support, came up, tested the resistance, and now we're pulling back again. So the question now is, are we moving down for another challenge of the 50% pullback level? If we remind ourselves, we basically rallied off that 50% and this old high through here. Are we coming back down for a test of 50 and then a move higher, or potentially even a drop down towards this low here and the 61.8? And if we're looking at euro rallying, an Aussie rallying, a British pound rallying, it doesn't stand to much reason that gold would also not rally as well, because it's basically a function of dollar weakness. So what I'm expecting to happen is actually that 50% level holds, and so I think probably the thing to go for is waiting to see if we can get some kind of reversal in sort of somewhere near the lows, where we're not making any kind of grand predictions, but we're saying somewhere within where this where the market previously reversed, it will come down and people will load up again for it to kind of bottom out and then maybe even move through, eventually end this correction and start pushing to the top side again. But the idea is obviously that we don't ultimately know. It's all just trying to pick spots that might be good risk to reward. So you've got to pull the trigger somewhere. Up here would not be good risk to reward, because you've got still so much room down to the downside where you could still ultimately be right, where it could still hold this low. But if you buy here, you've got a lot of time before you really know if you're right or wrong at this kind of trigger area of around 50. So better better to go for it closer to that 50 level. It might not actually get right down there, so you want to give yourself a chance to be in. And then ultimately we know where we're wrong. If the market doesn't turn around at the 50 level and starts dropping down again, well, then we know that we're probably on for a test of the 61 level. And then again we start thinking about reloading up at that level. So no bones about it, we are in a kind of bearish mode at the moment, but thinking in terms of the kind of bigger picture, thinking that actually maybe we're looking at a renewed period of dollar weakness, which could be good for gold, and so thinking maybe that the 50 level could be the bottom in line with this rising general uptrend. Okay, switching gears to crude oil, and I think this is one of the more interesting charts actually this week, is that we've taken out this long-standing resistance at 43. So Brent is already above 45. Sorry, is already above 50. WTI valued slightly less than Brent, so now challenging around 47. But I think that Brent making it up through 50 kind of tells us that we're in a slightly different ball game here. That will be confirmed when this crude oil contract WTI, when that gets through 50 as well. But it looks to me, if I zoom out a bit, like oil has chosen its direction. We attempted to break to the downside in whenever that was in September. It didn't work, and we've rallied up nicely, and we've taken out the resistance, which corresponded to 45, a decent round number. We've pulled back to the resistance, and now we're pushing out to the top side again. And so having kind of jostled through this period of does this breakout hold or not, this is when I'd start expecting the price to start expanding at a more rapid pace, more like this kind of area, into a kind of trending market again. If it does, it will take us up through $50 a barrel in WTI. The trend at the moment suggests that we get through 50. Of course, the trend can reverse. Watching out for this rising trend line through here. We've got a kind of false break here. That's another bullish sign actually. So we had a move up through this peak. It ended up being a fake out. We dropped down through the trend line. It was starting to look a bit dubious at this point. That we'd had a false break to new highs, and then we'd had a trend line break. But the fact that we've accelerated up again is a good sign. So this bearish breakout of the trend line, if you like, didn't materialize, and oftentimes the best bullish moves happen after the failure of a bearish move. Okay, switching gears to crypto, we've had a nice weekend gap, which is often the case in Bitcoin. Keep in mind that Bitcoin trading is 24 hours a day, and so even though the activity lags a bit around on a can lag on a Saturday, often Sunday is the days when we get the big moves. And this move has taken us up through. This is a shorter term 4-hour chart. You can see it's basically where we'd been correcting. The price has gapped straight through it, and then you can see on our 4-hour chart where we'd had a bit of kind of down sloping momentum since putting in those highs just under 20,000. We now seem to have accelerated. We seem to have turned the tide a little bit on momentum. Not surprising after a strong gap. And so what's the takeaway from this? Well, we could fill the gap. That's a possibility. We could come back and re-challenge these highs through here potentially, which would correspond to a retest of the declining trend line. That would be good if we had a pullback. It would be around 1850 or so, 18500, sorry. But it tells me that probably we're setting up a move through 20,000 for the first time in Bitcoin. And that's in line with the rising trend. Again, we've got our trend line in place. We tried to break through it, failed to do so, closed the week back up through the rising trend line. So again, a failed bearish move, I think in this instance sets us up with a good bullish move. And so we hit about 19,900 was the record high, and I think probably having had this pullback, we're setting up for a move through 20,000. Let's see. Last but not least, here's the S&P 500, and so we're in an uptrend. We've moved away from this kind of late October, early November big rally, and actually we've been stalling out about where that big reversal day. We've been kind of trending up into it, and we broke above it, and then we've been jostling around it. So still not a determined move to the upside, but the trend is very much up, and so we can try and call the top. Obviously it's very tempting. Incidentally, there's all sorts of sentiment measures, put call ratios and things like that that suggest that sentiment levels are extreme. So the level of bullishness of investors, surveys that have been taken, things like that, are all at multi-year highs in general signs of bullishness, which as a contrarian indicator, which is yes, people are just too bullish, and that normally this level of extreme level of bullishness, it's what precedes a correction. Now, of course, we can start selling into this price rise. That's not typically how I go about trading. That could certainly work, but you have to absorb some losses, and you don't know how long you're going to absorb those losses, because it's just literally a matter of picking the top, which is a difficult thing to do. So you have to sell, more price rise, sell again, more price rise, sell again, and we don't know how far this market can rise. So for me, for the moment the market's holding up and we're pushing to the top side, I'd rather ride it to the top side, and when it starts breaking down, that's when I'd change my opinion. So keep in mind, we probably are close to a top here. I mean, the market looks very bullish, but as I say, that we haven't had that actual indication in terms of how the price is moving yet. It's still looking quite solidly uptrending. Probably the first indication would be this rising trend line through here, which we had again a false bearish move and a little gap up through this peak, former record high here. So again, some attempted to turn the market around, doesn't seem to have worked, and we're looking bullish again starting Monday. And maybe that corresponds to the fact that we've just had that FDA approval of the vaccine on Friday, so that's obviously good news as far as the pandemic. Let's wait and see to see whether we've already been buying into the news. So was it a buy the rumor, sell the news event? Let's see. Alright, thank you very much everyone. That's the end of the webinar today. Make sure to click the subscribe button so you don't miss next week's video.